Why Roth IRAs are great in retirement. Hi, I'm Angela Dorsey, founder and financial planner at Dorsey Wealth Management. My goal is to help my clients have a retirement that is free from worry. And one of the strategies that we use to do that is to determine if Roth IRAs are a tool that they can possibly take advantage of. Roth IRAs are a way of minimizing your future taxes and maximizing your future growth. Roth IRAs are a great tool to have in retirement. And unlike a traditional IRA where you make a contribution and then you get a tax deduction on your return, with a Roth IRA you make a contribution, and although you don't get a tax deduction immediately, the money that you put in grows tax-free. And so when you retire and you withdraw money from your Roth IRA, the contributions that you made and also the growth in that account are tax-free. So that's really great. So you have a source of tax-free income. Now you may think, wow, this is great, but do I make too much money to qualify? Well, if you are an individual and you make more than $144,000, or a married couple and you make more than $214,000, then no, you're not eligible to contribute to a Roth IRA. But there's good news. You can do a Roth IRA conversion. And the way that works is you put money into your traditional IRA, and then you can move money from your traditional IRA into a Roth IRA, and that's called a conversion. Now, the downside is you will have to pay income tax on that money. So the trick is to pull out enough so that it doesn't push you into the next tax bracket. So that's where a Roth IRA conversion strategy comes in place. So I would recommend that you work with your financial planner or your CPA to determine what would be a good strategy for you. And I find that usually with my clients, what we do is we create an annual strategy of how much we could take out each year based on their tax return so that they can move some money from their traditional IRA and into their Roth IRA without putting them into a higher tax bracket. Now, another good thing about Roth IRAs is that they are not subject to required minimum distributions. When you are age 72, the IRS mandates that you start taking money out of your IRA and pay taxes on that. Well, money that's in a Roth IRA is not subject to that. So by moving money into a Roth IRA from a traditional IRA, you not only create a larger bucket of tax-free income, you also minimize the amount of RMDs that you are required to take out. Another reason why I love Roth IRAs is it's a really great tool to use for legacy planning. So let's say, for example, you leave a Roth IRA for your kids, so then they receive an inherited Roth IRA. Well, then they now have a source of tax-free income that they can use. So that's a really great gift. They now have tax-free income that they can use. The only requirement is that they pull that money out within a 10-year period. And there's some other requirements. For example, their account has to be open for at least 5 years to qualify for the tax-free status. So again, please work with a professional, either your financial planner or a CPA, to determine the best strategy for you. So we at Dorsey Wealth Management, we work with our clients to come up with a really great strategy so that they can take advantage of Roth IRA, either through a conversion or to contribute. If this is something that you'd like to pursue or learn more about, please visit our website, dorseywealth.com. Take a look around, and if you'd like to schedule a 30-minute introductory phone call, you can do so straight from the website. And I hope you enjoyed this video. Thanks.